What's up, everybody? In this video, we're going to break down in depth, which in my opinion are the most important concepts that you have to understand and implement in order to become a better trader. And it's really going to help propel you to that next level. We're also going to relate some of these ideas back to the charts to grasp more about the technicals behind each setup. And we're going to relate real trading examples to these concepts and compare it to everyday trading. Be sure to drop a thumbs up on this video. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps on here, along with very good trading tips and tricks. Link is in the description below. You're definitely missing out if you aren't following it. Now, let's get right into the video. At the top of the trading pyramid, understanding market mechanics, in my opinion, is very, very important. It's superior to everything else, because a lot of traders truly don't understand what drives price. Now, how the market facilitates trade is just like every other auction. When supply exceeds demand, the market comes down, and when demand exceeds supply, the market moves up. If there are more aggressive buyers coming into the market than there are passive sellers, the market will move up. And if there are more aggressive sellers coming into the market, especially at a supply imbalance, the market will move back down. The stock market is just like any other auction place. It facilitates trade to attract participants to the upside or attract participants at lower prices to the downside. It moves to facilitate trade to find fair prices or unfair prices. And this has to do with market context and being aware of the current story that the market's telling you. Now, this also has to do with market conditions. Just like the stock market, the real estate market right now is booming. The car auction right now, the car market is booming, and this has to do with the supply and demand equation. If you think about houses right now, houses are going way above the offer, the asking price, due to a large demand of buyers and not enough supply of houses available for sale to meet that demand. Same thing with the car market. Cars are going way above asking price because manufacturers are not able to produce new cars to meet the demand for buyers in the market. So just like the stock market, we will move up to find the price where buyers or sellers find it to be unfair value. And for me, my strategy has to do with supply and demand imbalances. And we look to capitalize on downside prices at a supply imbalance, or to capitalize on buying opportunities at a demand imbalance. Now, you also have to use market context to be aware of the story or the condition that the market's currently in, and being able to adapt and being able to flex or bend a little bit to the story that the market's currently telling you, and taking high quality trades based off of that analysis. Now, the second key point is learning yourself, which comes right below the market mechanics. I find this to be very, very important. A lot of traders want to get into the market. They think they're going to get rich tomorrow. They think they're going to learn something and they're going to be a millionaire with the next trade. Trading has a lot more to do with knowing yourself and learning your emotions, understanding your personality. For example, if somebody has a short attention span and they can't sit in front of the market and react to what the story is currently telling them, they watch it unfold, but because they're focused on something else, or they can't really process their thoughts in a reactive manner to make a decision in a blink of an eye, then someone's really going to struggle to start scalp trading or even day trading. Now, if you have a personality, for example, that maybe you are a little more passive, you're a little more conservative, and you don't want to see profits right away, but you're comfortable holding and you have the patience enough to maybe stick to your plan for a day or 2 days, then that person would be better for swing trading. So my point here is you have to understand the personality that fits you the best and then trade accordingly. Someone that doesn't work well under pressure might not be a good scalper, and they might be better for swing trading. Or someone that's not reactive enough might be better as a swing trader. So these all come with your strengths and weaknesses. No one's perfect. I'm not perfect. I have plenty of weaknesses. I have plenty of strengths. For example, my personality, I like day trading the most and I like scalping. The trades that I put on work out for me the best right away. So because of that, I have a very sharp focus. I like reacting to what the market's giving me. If I put my trade on and it starts working out right away, I know this setup is going to work out well. For example, this is an Amazon trade. The market rallied into this supply imbalance and immediately started selling off, making lower highs and also making lower lows. So my strength is being able to react and have a mindset to focus and wait for the next best setup. My weakness, honestly, is not holding long enough because I'm so reactive and because I trade so fast. I sometimes miss a bulk of a move because I take my profits off the table very fast when I have them, which is not a bad problem to have. However, it's something that I constantly try to improve and work on. Now, the third point is being more disciplined. This has to do with having false motivation. I see this all the time. I see it especially on Instagram. Everybody posts these motivational quotes. Nothing wrong with it, but the truest form of motivation comes from your own willpower and doing something that you don't want to do. You could have all the motivation in the world you want, but true growth comes from doing what you don't want to do. For me, after trading, 6.5 hours a day, when the market's closed, I really want to shut down, make my mind reset, and focus on the next day. But the true work comes after the market's closed and being able to go on your charts, review, journal your trades, seeing how you could improve, seeing what happened in the market to really paint the picture of the market context and the true story that the market's telling you. Now, this also has to do with everyday life activities. Some days I want to wake up late, I want to sleep in. Some days I want to skip the gym. But doing what you don't want to do is where the growth will come from. And everyday life activities will translate into trading subconsciously. It'll make you more disciplined. And everything in trading has to do with discipline. You have to prepare and plan, but you also have to be flexible enough to bend and do what the market's giving you, because sometimes the market doesn't give you anything, and you have to be patient enough to sit on your hands. I stress this with Invested Trade members all the time. You have to be patient enough to sit on your hands. When there's opportunity, you strike. When there's not opportunity and your edge is not present, when there's no momentum, when there's no volume, you have to be patient. Literally sit on your hands and do not force any trades. If you're not disciplined enough to sit on your hands and you force trades, I can guarantee you will lose in trading, you will blow up your account, and you'll have no longevity. Fourth point, which I attribute to a lot of trading failures, is sticking to one strategy. It's important to have multiple different tools in your arsenal. However, if you're looking for a holy grail that works 100% of the time, I can guarantee you there's none out there. But you have to stop hopping from strategy to strategy. You have to really build upon one single strategy and act like it's a foundation, and you keep laying bricks every single day, and soon enough you'll have a castle and it'll build into a really big thing. Now, this has to do with having an edge. So you first have to find your edge, which comes from your strategy. For me, my strategy is supply and demand. It's what makes me the most amount of money. Every time I deviate away from it and try to make something out of nothing, I take a loss. And there's no more frustrating loss than a losing trade from doing something obviously different from your edge. Now, going back to the prepare, plan, and be flexible tool on point number 3, let's go into the pre-market plan. I post these every single day in the Discord room. So today was on the S&P 500, whether you trade SPY options or the future itself. We had supply at 4227, and we also had supply at 4232. We were watching to see if they put a double top or a lower high at the supply. And if we reject it with strong selling confirmation, we're going to look to scalp puts. I really didn't want to fight the strong uptrend. And we had demand at 4218 and then 4204. So it's very important for you to come up with a plan, whether you look at my plan and use it as structure for your own, or come up with your own plan and use it as structure for your own trades throughout the day based on your style, your personality, and your edge. So keep in mind those levels. If we go to the plan today on the S&P, we opened up, we were gapping up overnight off of Memorial Day weekend. Very strong move overnight. coming into this supply imbalance at 4227. We had very strong aggressive selling pressure. Keep in mind we had demand around this area over here. So the market sold off. This is valid confirmation to take it long if you go to a smaller time frame and drill into any type of selling pressure. Really targeting demand. So your first target would have been this demand, and then the lower demands could have been your second target. We sliced through every buy zone today. Sellers were very aggressive, not only at supply, but they were also very aggressive at demand. And we had a very aggressive 30 or so point sell off into this demand imbalance. So this is my edge. This is how I trade. I could show you 100 other different trades. This is what makes me the most amount of money. And every time I hop from strategy to strategy, I lose because I deviate away from my plan. Now, the only way you're going to know your edges, the only way you're going to know what works out for you is if you journal. I attribute a very large portion to my success to journaling, keeping a log, and reviewing it. I removed a bunch of negative common denominators, stuff that did not work out. I removed, and whatever did work out, and I saw some similarities from some of my best trades, I scaled upon and I built upon, like that castle example I said earlier. Trading is probably one of the most scalable businesses, meaning if you see something that works for you a large amount of the time, all you have to do is increase your size, and your profits and your success and the money will also increase with it. The only way you're going to know what works or what doesn't work is keep a journal. You have to review and reflect upon that journal for any type of growth. And now we have less screen time is more. This is key because even when I first started trading, I've been trading for almost 6 years now. And when I first started in the first year or 2 years, I always thought, oh, I'm going to put 10 hours a day, really focus on the market. Let me study this inside and out. First of all, if you do that, you're going to try to structure trading, which is extremely unstructured. And the more time you spend behind the screens, it's actually counterproductive because it drains what's called mental capital. And it also will put this type of analysis paralysis in your head. So having less time behind the screens is more. Usually, this is just what I've noticed. Usually on Mondays and Tuesdays, like after a weekend, I trade the best because my mind is so open-minded. I'm refreshed, I'm relaxed, and I don't have 100 million different thoughts going through my head throughout the week. Now, the last point I'm going to leave you on this one is to join a trading community. You can't do this alone. This is a game that you're never going to learn fully. You're never going to master. I still learn it every day myself. However, you need to have proper guidance. You need to learn the proper mechanics behind the market. And you need to have a community that you can bounce ideas off of, something that's going to help you, and people that you can rely on and trust. So I think I'm going to end it there. If you enjoyed this video, drop a thumbs up on it. Comment any questions. I'll go through the comments and answer them all. And if you want to join the Investor Trade community and you want to learn more about the strategy, definitely check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord. I will be adding videos later in the week, and they're currently still discounted as the prices which are shown on the website. But besides that, peace.